Hey everyone, this is Stock Trader Jack. This video is going to be focusing on how to trade penny stocks for beginners. I'm going to specifically focus on three things. They're things I wish I'd known when I first started trading. So, one of the key things I'm going to tell you before we really jump into this is this isn't going to cover everything that you need to know. This is going to cover a lot of the key things that are probably, some of it's probably going to be a little bit familiar. Other things are most likely going to be either a little new or hopefully clarifying things that you've learned along the way. So if you're just starting with penny stocks, if you've been at it for maybe a year or two, if you're still trying to figure out what moves price action or anything, this is the video you want to watch. So first thing up, rule number one, play by your rules. Now what does that mean? So I actually have research from other successful stock traders, from things I've learned along the way. There is really no rules that's going to make you a foolproof winner. There's nothing that's going to make you be a 100% always win kind of trader. In fact, even the best traders, even the Warren Buffetts of the world that consider themselves investors, even the mentors like Tim Sykes or Sean Deckmar, several other ones that are out there will tell you there's no such thing as a legitimate 100% win rate. It just doesn't happen. But that does mean that you need to have rules that you play by that are going to help you be successful. That also means that it's going to be your own headset that's going to be involved. So some rules that work for other people may not work for you. These rules, on the other hand, are something everybody needs to have implemented. Even if it means something different to you, it's something you must have in your tool belt. The number one, and yes, if you haven't heard this a million times, you haven't heard it enough. It's cut losses quickly. That actually comes from a lot of successful traders that even I've talked to, and from my own personal experience. You do not be patient with losers. As soon as they are losing, as soon as they start, draining your account, the point that you say, hey, you know what, this is where I'm cutting it off, I've planned to get out of the trade right here. If it hits that point, don't keep hanging in there. Don't just think it's going to turn around. That is the best advice I could give you. It's your biggest money saver. It's going to help you with knowing that if you have losses, that's okay. The only time it's a failure is if you learn nothing from it. But the main thing to always keep in mind is cut losses quickly. Anyone who leaves that running for a long time is very likely going to blow up their account. So that's the big key number one. One thing that's also huge, and this is probably one of my biggest recommendations beyond cutting losses quickly, is you do not need to learn every single pattern available out there. Yes, there are a lot of patterns. You can, the cup and handle, the breakouts, the stair step, there, and all other kinds of names, some of them better than others. It doesn't need to be a mastery of all these patterns for you to be a successful trader. In fact, the most recommended strategy for any penny stock player is master certain trade patterns. Pick like one or two and just become really good at those. It may mean some days you do not play the stock market. There's just nothing that fits your pattern. That's been happening to me for like the last 2 or 3 days, and it's driven me nuts. But I do not want to get desperate and just play anything. What I want to make sure I'm doing is I'm playing the trades that I'm familiar with, because if they don't go the way I wanted them to, I can get out and get out quickly. But most of the time, and again, you are playing probabilities here, this is going to help you recognize probabilities. The stock market is not about predicting as much as it is knowing what's probable, what is most likely going to happen. If you master one or two patterns, you're going to look at charts a lot differently. You're going to see opportunities in there. You're going to see something that says, hey, most likely it's going to do this because I've seen it again and again and again. That is exactly the kind of headset you need to have going in any trade. If you start playing patterns you do not recognize, you will not know what probability of success you're going to have. So master one or two trades, even if, I don't care if it's the breakout, if it's the cup and handle, if it's the flag, double bottom, multiple bottom, whatever works for you, great. And I have a lot of different, we'll go into more and more about that as these weeks roll on to help you figure out what pattern best fits your headset. That is where you want to become a master. Pick one or two patterns, become the master of those. The final one is be patient with gainers. This was actually one that was hard for me starting out. As much as cutting losses quickly was hard, and I had to learn that the hard way like a lot of traders have, be patient with gainers. This means that as soon as you start getting the hitting the target that you want, don't feel like, hey, you know what? I need to get out of this trade with my 50 bucks. Boom, I'm done. This means that it is okay to let a runner run. Sell into strength. As soon as that thing looks like it's getting really, really strong, you see it start tapering off a little bit, great. That's the point where you can get out. But while it's green and while those candles keep growing and growing, don't feel the need to just get out. I will say that there's also something to be said for not getting greedy. That means that just because the ticker is up, like say 50%, and you've already captured a good meat of that move, that doesn't mean that you necessarily need to hold on to that trade and be super patient with it. It does mean that as long as the chart looks good, you know what? Stay in for as long as you feel comfortable. As soon as you are uncomfortable with the trade or have hit your target, get out. That's the time when you sell. Some of the most successful traders, and they actually do their strategy a little bit different than a lot of people. They do something a little counterintuitive. Rather than buying into a stock and then just seeing what it's going to do, like when it starts sinking, going down, a lot of traders just intuitively go, okay, it's fine, it's going to bounce back, I'm going to be okay with it. And they're far too patient with their losers. So they're just sitting there going, oh, I'll just hang on to it. Eventually it's going to come back. Even a guy that I work out with was telling me, okay, yeah, I mean, I've invested in this Bitcoin, and I know it's tanking, but it's fine, it's going to come back. And I'm like, you know, that's well and good, but that is straight up just hope. Hope is not a strategy. Whereas with gainers, if they're showing signs of gaining and there's still upward momentum, let the runners run. Be patient with gains. Don't abandon your goal even when the chart is looking favorable. If it's going up and there's three long green candles going up, and then suddenly you start seeing a little bit of red trickling in there, don't feel like you need to get out right that second. What you want to do is wait until you start seeing the weakness, where it's the highs are getting lower, the lows are getting lower. That can honestly add hundreds of dollars to your gains on each play. Okay, so number 2, plan and track every trade. This is also something that a lot of impulsive traders forget to do. Take some time to actually study a stock before you get in. Here's a good example. So this is straight off of the Stock Trade Tracker 2019 that we just released this year. Plan a trade means just plug in, look at each look at each ticker that you have on your watch list, plug in the entry of what's about the price range that you wanted to get in, how much you want to invest. That way you know exactly how much it's going to cost you, how much you want to get out of it, and how much you're willing to lose. That should all be in your headset before you ever enter a trade. And on top of that, don't forget to do your due diligence. Some people jump into a trade way too soon just because it's getting hyped up on Twitter or a chat room or stock twits. That is a terrible time to jump in on a stock. One of the worst things you can do is forget to check out, okay, when is its earnings coming up? This, for those who followed the blog, that was when I experienced one of my biggest losses, was playing through earnings and just really not doing my homework. Analyzing, making sure that you get a chance to kind of research the stocks, see what kind of direction this is likely to go, any news about it. So former support and resistance. This is big with technical traders, but it's a good thing for you to know as well, because remember, we're all variables in this game, which is actually something I'm going to go into next. And even checking out what's the word. I personally like to do this, is go out on social media, just check out what's the latest word on it. Yes, you're going to see people who are trying to pump or, crap on the stock, but honestly, just take a little bit of time to just see what the sentiment is out there. Honestly, this is one of the big ones of getting into any trade. You want to have an idea what profit or loss you're willing to accept before you go in. That way, if the trade turns against you, you're not panicking. I know they say don't have any emotion, be an emotionless trader, That's a load of crap. Nobody is emotionless. We are emotional beings. So what you need to have prepared is, I'm going to be a lot less emotional, a lot more logical if I know what I'm willing to let go and what I want to gain. This is the key to helping you keep as much emotion out of it as possible, or at least have the correct emotions in place, have the correct logic already set out. So anyway, with that, the Stock Tracker 2019 does allow you to plan your trades. I highly recommend documenting trades that you have played to make sure that you can follow up, look at what has worked for you, honestly analyze what is going well in your trades, what's going poorly. And that's as much as we're going to talk about that. Finally, it's understanding why prices move. I actually did not understand this until just a couple of years ago, and I've been doing this since 2012, where I would look at the stock and I'd be like, why did that just move up? Like, it looked like there was a lot of buyers at X level. It didn't seem like there was many sellers, and yet the price still went down for some reason. Well, the truth of the matter is every single person playing the stock is a variable. It's not a machine that runs on its own. It's everybody going in has a role to play. And price stock, like, have you ever noticed that prices on certain stocks seem like they should be a lot higher than others? Like, even though Disney just broke out, Disney's like the second largest conglomerate on the planet after Comcast. So why is it like half the price, or at least was very recently, half the price of a company like Apple? Well, Apple's a humongous company, but Disney has, well, around 25, 30 subsidiaries already to its name. It's just like one company under Comcast for conglomerate sizes. Well, it was only like $100 to $110 per share up until just recently. Well, then the thing is why is it that was so low, and another company like, say, Netflix is so huge? Well, the thing is, it's all about who's buying into that stock, what size trades they're doing. Are there more buyers or are there more sellers? You are a part of that. You are one of the variables at play. You can move a stock price up or down, especially if you have a little bit bigger position based on, we're not going to get into market cap, but if you are playing larger stock, like more shares, you're going to have a bigger impact on that price than, say, someone with a smaller share. So price is affected by other buyers and sellers, you, that come in and either buy or sell that stock. So a good way to describe this would be like, let's say you own shares of SIRI, and let's just say you own one share, or sorry, we'll say like 400 shares at $6.50. So you're one of the owners of SIRI, and someone comes up to you and says, hey, I see you have shares at $6.50 a share. I'm going to go ahead and buy those from you, but I don't think they're worth $6.50 a share. I think they're worth $6.30 a share. So they think it's worth 20 cents less per share than what you own it at. So you say, well, it's not moving, and it looks like there's these people coming in who want to buy it, but they don't want to pay the price that I want them to pay for it. So you sell. That drives the price down. Now, imagine that happening over and over and over again by people with other large position sizes. That's going to drive that price down even further. And it's what we call mob mentality, especially if you're seeing a lot of red candles or a lot of downward movement of a price of a stock. It's because the mob says, hey, you know what? We need to get out. Or, we don't want to stay in this position any longer for any number of reasons. The same is true if, let's say, you still own that share of SIRI and someone comes in and says, hey, I want to buy those from you. I'm willing to pay $6.70. And let's just say you say, no, I don't want to make any deal on that. I want to hold. Then there wouldn't be any price movement if you were, say, the only person who owned that share. But that same person says, well, what are you willing to charge for it? You say, I will sell it to you for $6.85 a share. And the person says, okay, sold. Well, at this point, you would drive the price up. That happens over and over and over again in a short amount of time. You're having that whole exchange happens super quick, every second of the market. Still want to learn more about stock trading? Come on over to Stock Trader Jack. We have a lot more free videos, a lot more free education. Even basic membership is free, so you can get started on hitting your stock trading goals.